Chapter 3, Part 1, there are two parts. This first part is going to cover items on the balance sheet and what you have to show for financial disclosure, kind of an overview. And this ties in with your homework. Now the balance sheet. Usefulness. Computing rates of return, evaluating the capital structure, assess risk and future cash flows, analyze the company's liquidity, solvency, and financial flexibility via ratio analysis. What are the limitations? Most assets and liabilities are reported at historical cost, use of judgments and estimates, and many items of financial value are omitted. Now, balance sheet classifications. We have assets. We break these down into current and non-current or long-term, and within non-current there are subcategories called long-term investments, PP&E, intangible assets, and other assets. The liability side is a little easier, actually liability equity. Here we've got current and long-term liabilities, stockholders' equity. A classified balance sheet helps informed users determine working capital and do ratio analysis. Now we'll look at some problems. First, I wanted to go over a few ratios with you because you have to do this part of your homework, and I wanted to show you how to do them. So, liquidity refers to the readiness of assets to be converted to cash. Common measurements are working capital. It is current assets minus current liabilities. We also have what's called the current ratio. It's current assets divided by current liabilities. Depending on the industry determines if a ratio is good. But normally you want to have this at least 2, which means you've got twice as many current assets to cover your current liabilities. And then the other test they talk about is the acid test, also called the quick ratio. And it is quick assets divided by current liabilities. Well, what are the quick assets? Well, that includes cash plus marketable securities plus accounts receivable. Now, these ratios provide information about a company's ability to pay its short-term obligations. So now let's look at an example. And in this example, what we're going to do is first thing you always want to do when you're determining working capital, in this example, is we first need to categorize which of these accounts are short-term assets, and that would include our cash, our investments, accounts receivable, and inventory. So that would give us our total current assets of 900. Then we would look at our current liabilities. In this case, we just have one item, or they're all subtotaled together in that category, and we would subtract those, and that would tell us our working capital, which means that if this is millions of dollars, of the 900 million in total current assets, if we covered our current liabilities, we'd still have enough to cover our long-term obligations, which is something a bank would look at. Okay, now what we're going to do is we're going to solve. So, in this example, we need to determine short-term investments and retained earnings. So how are we going to do that? And the information they give us is this information that's from a trial balance, and they tell us that the current ratio for the year is 2-to-1, which means they've got twice as many assets as they have current liabilities. So I'm going to show you how I would do this problem. First, what I would do is I would segregate out all of my current assets and current liabilities and total those up. Now, we don't know what our short-term investments are, and we don't know what our retained earnings are. So we're going to add these up because these are all our current assets, but of course we have to solve for short-term. And these are all our short-term liabilities. So first, we're going to go work backwards. We know that the current ratio is going to be our current assets plus some number for short-term investments divided by our total current liabilities of $61,500, and we know that the ratio is 2. So now what we're going to do is take that $61,500 and we're dividing with it on that side of the equation. We're going to put it on the other side of the equation, which means we're going to multiply, which tells us our total current assets are $123,000. Next, what we're going to do is solve for short-term investments. We know that total short-term investments are $123,000. Our previous balance was $90,000, which means our short-term investments are $33,000. Now we can plug those in. Now what we can do is solve for our total assets, which are $243,000. Next, we can determine our retained earnings, because if we take our total assets minus our liabilities, that's going to give us our retained earnings, which is $31,500. If we add that in, we get $243,000, and now we balance in terms of our assets and liabilities. So that's how you would solve if you were missing part of the information. So you have to remember how things work, like how does that current ratio work? What are current assets? And that assets must equal liabilities plus equity. Now, another area that's covered in this chapter is financial statement disclosure. Now, two types they cover are what they call significant accounting policies. Details key policies and methods including inventory costing, depreciation methods, and revenue recognition. We also have what we call a separate note. These are events such as subsequent events, related party transactions, errors or fraud, if relevant, are explained in a separate note. Now, all has to do with materiality. Would it affect the decision of an informed user of the financial statements if they knew the information? So let's look at an example. A, it's a significant accounting policy note, or B, it's a separate note to the financials. So, timing of recognizing revenues would be A. Information on related party transactions would be B. Composition of property, plant, and equipment would be B. Subsequent event information would be B. Measurement basis for certain financial instruments would be A. Important mergers occurring after year-end would be B. And define cash versus cash equivalents would be A. That ends part 1 for chapter 3. And if you have any questions, you can always email me.